Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, last week we said that we were hoping for a little bit of consolidation in the markets this week to try and put a halt to the downward progress that we've seen since Christmas, but unfortunately it didn't happen. Even though on Monday, a good start to the week with a little bit better news from the housing front lifted all the indexes quite strongly on Monday. Tuesday and Wednesday we saw heavy selling days, and really this pessimism continued till the end of the week. And even on Friday, when President Bush and Congress obviously hurriedly put together a package whereby we would inject, or we would see 145 billion injected into the US economy in the short term, this simply wasn't enough to pacify the markets. So although Friday started with a little bit of optimism for this fiscal package, it didn't last, and by the end of the day the markets were down again below the zero line. Losses were contained, but it was still quite a drop from the optimism that we'd seen first thing in the morning, and the indexes, the Dow and the Nasdaq Composite Index, had both lost 4% on the week. We have a feeling, though, that when the market has more time to digest the fiscal package now on the table, plus the comments from Ben Bernanke last week regarding further interest rate cuts, the market may well stage a consolidation this week. Let's take a look at our Nasdaq chart.
I'd like to take a look now at the one-year chart for the Nasdaq Composite Index, so we can really zoom in on this head and shoulders reversal pattern, which is the pattern that we've been predicting for some time now, for the market to reverse direction, and this has in fact happened over the holiday period. It all started back in July and August of 2007, when we had the left shoulder being formed at the first breaking of the subprime mortgage problems. That news caused that sudden drop in the market and formed the left-hand shoulder, and then we had a rather nice autumn rally, certainly in tech stocks, which took the market back up again to new highs and formed the head of the pattern, which is this area here, before Christmas, where we quite accurately predicted that the market may well then form a right-hand shoulder. So we were expecting a little bit of a pickup before Christmas, and over the Christmas period it continued before falling away coming into the New Year period. And in fact the sharp drop at the end of last week, particularly on Friday when the Nasdaq on one day dropped nearly 100 points, this penetrated what was effectively the neckline. This line here is the neckline of a head and shoulders pattern that has now formed and is a very significant line to be penetrated. We do feel that there is little chance now of the price channel that was formed over the last 2 months continuing, because the penetration seems to be quite certain here. So there's less likelihood that this is just a continuation of a consolidation phase. More likely that selling will continue into the new year a bit further down, before then some sort of rally will be attempted to bring the price back up again to touch, or in fact just go over by a short measure, the neckline line here, which will then probably signify the market turning south again and falling away in a more prolonged downtrend.
So I think there's little doubt now that we have got this head and shoulders reversal pattern now, telling us the market is likely to go into a prolonged downtrend, and this could very well be the start of a bear market. If the US economy certainly moves further into recession, then the bear market is definitely here for this year. Whether it lasts past this year is obviously up for debate. Our feeling is that the bear market is more likely to be relatively short, and hopefully by the end of the year, with the impact of the US general elections and the prospect of change in the new administration, bringing some economic reforms, and certainly a different scenario than we've had over the last 2 to 3 years, that the market could well start to pick up again strongly. But our indicators are also telling us that the downtrend is liable to continue well into this first half of 2008 and continue quite steeply. We wouldn't like to be able to pick a bottom to this market going forward from this point, but we do still feel that we're in for some consolidation at this level, or certainly not much lower, and then some sort of a retracement back towards this neckline of the head and shoulders pattern that we pointed out to you last week. So hopefully there might be a little bit of a breathing spell before the downtrend really resumes in earnest. Let's hope so. With the exception of the financial sector, the earnings season hasn't really been too bad so far, with such notable names as IBM posting really quite good results. We're keeping a close eye on the whole situation, of course, so until next week, it's goodbye from London.